cash return on cash invested. It takes into account the operating cash flows or the free cash flow to firm in the numerator divided by the company's total capital invested, that is debt plus equity minus any goodwill. Because goodwill is simply the excess that we are paying over the company's fair value. It's simply the premium. Here we need to understand is there might be some companies which might be incurring some short-term losses, but the business model might be solid. Or the company might be making less profits, but the cash flows of that company might be highly positive in terms of operating cash flows or the FCFF. Here we need to understand is the price to earning multiple manipulative in this case? Or the ROE or ROCE being manipulative in this case? Now here I do not mean that ROE or ROCE is bad. ROE and ROCE should be used for every company to judge the investment opportunity. It's the barometer of the valuation ratios. But if we try to understand is that whenever we are trying to value a company and not price the company, we calculate something called as an intrinsic value of a company. So do we use the cash flows or earnings? Cash flows. Cash flows are important versus earnings. The profit and loss statement is based upon the accrual system of accounting. That is, you shall be recording the transactions as on date, irrespective of the fact the cash is received or not. But the cash flow statement is based upon the cash system. Only cash inflows and cash outflows shall be recorded. The price to earning multiple becomes an earning driven multiple, which can be manipulative in such kind of companies. Even the ROEs or the ROCs are also earning driven multiples, which again can be manipulative in these kind of companies where the companies might be incurring some short-term losses or the profits might be less. But the business model of those companies might be solid and the businesses have the potential to turn around and make higher profits. And these companies might already be generating higher operating cash flows. So have an understanding upon the cash return on cash invested. That simply talks about the operating cash flow or the FCFF divided by the total capital invested net of goodwill.